Hello friends, my name is Behroz and welcome to my channel. In today's video, which is a podcast, my guest is Ali Merchant, who is a capital market expert. He's a trainer as well and has a training course on capital market investments and all. But today specifically, the reason we have him on the podcast is to talk about the expected earnings of the big tech. So he will be sharing what to expect from big tech in terms of the earnings which are coming in and how to think about investing in those companies and in the market altogether. Now, before going into the podcast itself, in case you find any value from this video, I have a special ask of you, which is to please press the like button, as this keeps me motivated. And secondly, also subscribe to the channel, because on this channel I talk about how you can achieve success in your career and build wealth. If these topics are of interest to you, this channel is right for you. Now, without further wait, let's get rolling into the podcast. Hello, Ali. Thank you for joining again. We had you last time as well for a podcast on what to expect from 2025 with regards to investments in stock market. And here we are, where we are a few days away from major earnings report coming in for the quarter of October, November, December 2024. And for that matter, some of the organizations or companies may have their full year as well, depending on which it is. But in any case, I won't take a lot of time. I rather just pass it on to you and tell us what to expect from these earnings coming in, and what should be the stance in terms of investments. So over to you, Ali.
So thank you very much, Behrouz, for inviting me. My name is Ali Merchant. So by designation, I'm CMT. I manage my own funds. I'm into investment industry for more than 25 years, and I'm the founder of TWW Learning, where I provide education, learning, and research to my clients. I've been trading for more than 25, 30 years all across most of the asset classes. And since last 3 years, I'm an active day trader. So that's a little bit about myself. What we're going to present as just to move forward from where we were last time. So during the 2025 outlook call, we had a discussion that we'll see how the market behaves before the U.S. president inauguration, and after how it reacts after the inauguration. So we have seen as we expected that the market took a dip, and which I'll show you on the charts, and then it moved higher after the inauguration because the pace of executive orders and the policy which was discussed during the election and the delivery part of it's going very fast than expected. So what we have next week, in the upcoming week of 27th, we have three major mega caps. Now this week is full of key events. Fed rate announcement on 29th of January. We have earnings from three large caps. From MEC 7, we have Meta earnings on Tuesday, aftermarket. We have, so the content of my presentation today is upcoming earnings. I'm going through S&P and NASDAQ weekly outlooks, Fed rate meeting, Apple earning preview, and Tesla technical outlook. Right? So on my second chart, it shows that there are a lot of earnings on Wednesday aftermarket from Meta, Tesla, and Microsoft. And then the next day we have Apple, one of the second largest company in the US after Nvidia. So let's go to my third slide. Now, as we expected during our 2025 outlook call, that I was expecting a dip in the market. We were expecting a dip in the market. We have seen a dip before the inauguration, and after inauguration, we have seen such a nice move. And in candlestick pattern, which we call it as a piercing line candlestick pattern, that has negated the move on this chart, on S&P weekly chart, a week before the inauguration. Between first and second week of January, the market dipped, and then the second and third week of January, the market has picked up. And that piercing line is suggesting that the market still has bullish momentum. In the case of S&P, we have seen a new high, as expected, where if I go to my next chart, which is NASDAQ, in the case of NASDAQ, we have seen similar pattern, but we haven't broken the high yet. That means NASDAQ is lagging a little bit to the S&P. And we have now everything depends now on how we see the earning season, and the major earnings are expected from mega cap next week. Now let me go the other event, which is the interest rate, which is on my fifth slide, which is suggesting that we will have interesting time going forward, because the Trump administration, or Trump, has asked the central bankers to bring the interest rate down in the Davos World Economic Forum. What Fed is likely to do, the Fed watch from CME suggests that 97.9, almost 98%, Fed is not going to change the rate this week, and all the way into May meeting of May 7th. It looks like the Fed is going to keep the interest rate. The probability of interest rate cut is, for this upcoming meeting, this Wednesday, is 97% no cut, 72% no cut for the meeting in March, 19th of March, and almost 7th of May, there's about 50% probability of a no rate cut. So that's going to be an interesting scenario, how this moves into the later part of the year. So that suggests that we'll have some. Fed will be looking at inflation. Trump administration will be looking at increasing jobs, tariff, and then the Stargate project they have announced for the AI. Right. So that's also so more technology related government. This slide is basically TWT. I'm the founder of TWT Learning, and TWT Learning provides markets trainings with my 25 plus of years of experience in the market. So we teach about how to look at the market flows, order flows, how to look at the option flows, how to look at the technical analysis and the fundamental part of it, and combine it to come to a decision and then take the right choices in the market. And let's move to the next slide, which is the key earning part of it. So on the next slide, I'm going to give you the preview of Apple's earning, right? So Apple reports December 2024 period ending earnings on Thursday, January 30th at 4:30 p.m. So after market. Now, historically, Apple has mostly about 43 beats since Q1 2013, and 3 misses. Whenever it beats, the price movement, post earning within 1 week is about 2.73% positive. So 2.73% of gain after 2 weeks is 1.94% of gains, and after a month it's 3.71% of gains. Interesting part is whenever it misses, it gets a nominal gain within a week, like 0.03%. Within 2 weeks, 1.92%. Again, it's higher, and 2% higher. So this is what the history is suggesting. Now, if we look at the analyst ratings, so from Refinitiv, there are about 32 source is Refinitiv, and there are about 32 buy recommendation to hold, 12 hold, 4 sell, and tip ranks is suggesting 19 buy, 7 hold, and 4 sell. So that means both of them has one thing in common: 4 sell. That means these 4 selling is recent, and what's earning expectation is about $2.35 for the quarter, and revenue of $128 billion. Let me move to the next one. This I have taken it from Investing Pro, and it has given all the pros and cons. So basically, put the central idea of what to look at in this earnings. So Apple has raised its dividend for 13 consecutive years. Stock generally trades with low price volatility, which is good. Prominent player in the technology, hardware, storage, peripheral industry. Now, these are the pros. Has maintained dividend payment for 13 consecutive years. Analysts predict the company will be profitable this year. Profitable over the last 12 months. High returns over the last decade. Strong return over the last 5 years. Now, the cons are trading at a high earning multiple. Stock has fared poorly in over the last 12 months. High trading at a high EBITDA valuation multiple, trading at a high revenue valuation multiple, trading at a high price to book multiple. So this is the summary of what the analysts are expecting. So these are the pros and cons of those for those who wants to consider. Now I'll look at technically. So now I'm showing you the chart of Apple, the weekly chart. Apple had a very nice run into this year before it got down, before it dropped lower from almost 250 to 220 to 18 in last week. Now the reason of this trigger was the the lower sales in China. China is the second biggest market for Apple. So lower sale in China in November, December, and that has triggered the sale. But if what I have seen, Android had a similar situation. So it's not only Apple. Android had a lower sale in China in Q4 last year. Now the important thing will be the guidance on earnings. Chinese New Year has either started or is going to start from this week. What I see technically that Apple has come down to 219 and 214 support range from where it moved higher to 250. Post earning, with a good earning and good guidance, even good earning and good guidance will trigger a move to 235. A little bit sluggish earning with a good guidance will also move towards 235, 235 and a little higher, 238. Now, bad earning and bad guidance will take it down. So we have to look at how the earnings play. But technical pattern suggests that there is a move to 235 to 238 in the coming post earning. Let's go to my one of the final chart, which is Tesla. So in the case of Tesla, what I'm showing on Tesla is Tesla had a very good run from November 6th, from I think 240s to almost 480. Now Tesla is consolidating between a triangular range, and if I am not wrong, that is between, we are likely to see a trading range between, on the upper end is 450, 445 to 450. On the downside, we are going to see somewhere around 380. So Tesla is most likely going to be a range play. I think Tesla has run its course, but there is again, Tesla always surprises. You never know what earning surprise we get from Tesla. But overall, Tesla, this formation suggests that we hold this range. Eventually, we're going to go higher on Tesla over the period of 2025. So that's what my outlook is about the earnings, covering Apple in detail and then Tesla from technical perspective.
Got it. Thank you. Thanks a lot for sharing, Ali. So I have one question, rather two questions, which is, and they're related to the interest rate changes. So if the interest rate is not expected to go down based on the probability that you shared, will that have any impact, and what kind of impact would it have on the stock after the Fed meeting? And second, how would this impact the Canadian dollar, if any?
Okay, so let me take your second question first. Now, with the Canadian dollar, there are two things in play. Bank of Canada, which to my reading is, I think they're still in the easing cycle, and they probably will continue to ease. But the biggest issue or biggest challenge to the Canadian economy is the tariff. And as President Trump indicated that he said he is likely going to put 25% tariff starting from 1st of February. So there's going to be, it will be more, we have to look at where the tariff talks goes on, what starts from 1st of February. So there's a lot of the Canadian market will remain a lot fluid than expected. When it comes to interest rate, yes, the first interest rate. So the market overall knows that since since the last Fed meeting, Fed had indicated that next there's no rate cut, there is a pause. because of the tariff talks. They're looking at the inflation to go higher, and they will have to fight the inflation, which they were fighting since 2022. So, market, in my perspective, this news is discounted, but all depends on what next. That will come after the press conference of Fed chairman, what he says in his press conference. I looking at the CME interest rate probability. Interest rate market is not expecting any rate cut until May, but the stock market is still holding strong. So I think still the money which was sitting, which we mentioned in the last calls, that there was about $5.5 trillion sitting on the sideline to be invested. I think that money is pouring in slowly.
Got it. Thank you. This was helpful, Ali. Thanks for this update. Again, we'll connect probably next week or in 2 weeks' time again for the news that is in the market, how the market is reacting, and how should we read and invest in that changing environment. So, thank you for joining, and thanks for a wonderful update.
Thank you very much for inviting, and looking forward to do more podcasts.
Thank you, Ali.
Take care.